We have witnessed markets become accurate and frothy. I have 35 years of market coverage experience. As you can imagine, I went through 99. We experienced the unpleasant 2021 peak in 2022, followed by 2019 and 2022. Additionally, I would suggest that extremely careless borrowing during a period when cycle indicators are at their peak is a sign of a top. The fact that ISM manufacturing hasn't been over 50 for 29 months is something to keep in mind in 2025. The longest stretch in history is that one. Thus, we are aware that companies have been extremely cautious. It does, in my opinion, match the $7 trillion in currency that you see, regardless of what some people claim is froth. People are wary. As you are aware, the United States has surpassed all other nations when individuals are careful at the top. And if we examine what is actually driving the U.S. economy, it is technology and, more recently, digital assets. These two factors are essentially invincible in their leadership of the U.S. economy. Tom Lee will explain to you today why he thinks everyone should get ready for bull market peaks that are unlike anything we have ever witnessed in all investment markets. Indeed, this encompasses XRP, cryptocurrency, equities, real estate, and all other digital assets. There is a significant amount of money on the sidelines. Every time there is a significant market correction, there is still a significant amount of purchasing power available to enter the markets. And for that reason, we have often observed V-shaped recoveries. We are always prepared to soar back up after a downfall. Indeed, in today's video, Tom Lee will be dissecting this and discussing all of the capital and money that are still sitting on the sidelines and the impact that will have on the cryptocurrency markets. Be sure to pay close attention to the very conclusion. I'll be giving that section of the video some much-needed background. To ensure that the entire XRP army sees it, use the like button. Let's begin. Due to high mortgage rates, which are keeping home prices high, we are seeing a housing shortage that has gotten worse. Thus, I believe there is a problem with the policy. Another question is whether inflation is indeed at an 8. I believe there are other policy measures that can be taken to slow the economy, such as the fact that there are all these tariffs in terms of taxes for businesses. If someone told me that there are $4 billion in taxes on the economy and that the Fed must remain tight, I would find it counterintuitive. Core PC is at 2, and the Fed is at 4.5. The Fed finds it extremely difficult to explain why they are keeping real interest rates high, which really hurts consumers. Lee is essentially discussing the enormous discrepancy between the Fed's actions and the data that is actually being displayed. The U.S. economy is under unprecedented pressure due to higher taxes than ever before brought on by tariffs. Of course, the government is receiving billions and billions of dollars in tariff revenue, which means that money is actually going to the government and out of the pockets of many people worldwide. Either foreign nationals or, under certain situations, citizens of the United States when conducting business with nations that have imposed retaliatory tariffs on the United States for a long period, or those that have done so recently. In light of everything mentioned above, I believe that something odd is taking place here. To damage the Republicans in their midterm elections, the Fed is taking actions that many are now beginning to suspect are highly motivated by politics. People are sort of pointing at that. The only logical explanation is that the figures they are reporting on are completely different from the actual figures. As a result, rich investors, whales, and institutions have a lot more money in their possession than they had in the past. Take a look at Berkshire Hathaway and the substantial sum of money they currently possess. Berkshire Hathaway is not the only company with record amounts of cash in the hundreds of billions of dollars, and it is currently at all-time highs. The markets are still able to reach all-time highs despite the numerous past instances of this. Why is that, then? Currently, a number of things are occurring simultaneously. Firstly, we have unprecedented levels of foreign investment in the United States, whether from Saudi Arabia, Japan, Europe, or any other country. Numerous nations are investing historically large sums of money in U.S.-based cryptocurrency projects, equities, and other ventures. Take a look at the XRP holding armies of Japan and Korea, for example. The amount of money people are investing in these digital assets, and of course stocks, is simply outrageous. That's a big deal then. However, we are also witnessing unprecedented levels of domestic retail investment in the United States. Retailers are essentially investing heavily in equities, real estate, digital assets, and all of these other asset types. Institutions are hoarding large sums of money in anticipation of a significant crash, and everyone is essentially placing bets. I would like to hear what you all anticipate happening here. Before we move on to some more really critical material, I would want to play one more important clip from Tom Lee. Keep an eye out. Investors liquidated because they believed we were about to enter a recession, and the market plunged when April rolled around and we got Terraform aged on. However, as you all discussed, The market then experienced a V-shaped recovery, which surprised a lot of individuals who were hoping to get in. They desired for the stock market to resemble a flat or K-shaped line. Rather, it bounced in a V form. Because of this, the majority of investors are now underexposed and attempt to evaluate headlines with a half-empty perspective. I wish you could all join me there. If you appreciate the article, hit the like button and subscribe. Below are Crypto Crusaders. I'll see you all there. Goodbye.